let me look at the questions first before we go down to 15 minutes. Right. Sorry, please. 1 minute. Quite a number of questions. If the breaker is far away from the peak, can I spot the breaker on H1 to trade away from the peak to get a better entry point? Yes and no. And let's go back to EG. Let's go back to EG. That question was from who? Sorry. Yes or no? I think it was Jane that asked that question. If the breaker is far away, you know, when you're doing markup, after the candle has been printed, it's easy to fool your brain into thinking I would have done this and I would have done that. In the heat of the market, in the heat of a live trading situation, it's very difficult to say what you would have done if you don't have a fixed entry and exit rules. You've got to have fixed, like almost mechanical, right? That way you could predict that, okay, I would have done this in this scenario, right? If we see price printed already, your mind could tell you so many things. If the breaker is farther away from the source, you only trade the second leg away from the breaker. That is your safe trade. You are assuming that the next day, assuming is a price, assuming that happened late evening or into the Asian session, Steve Marrow will say it's a straight away trade. You know, it just continued, right? You want to look for a retest of the last step away from your order block that closes beneath, in this case for a sell, beneath the breaker, right? You want to be sure that the trend is continuing, right? But if the breaker is far away from the source, personally, I'm not confident to take the trade because I know from back testing that most times price would go back to retest the source. Sometimes it even shoots above the source, giving us something that looks like a turtle soup and then dropping further, right? So that's that. 1 minute. 1 minute, please. Let's see. Okay, right. So I have sorry, I'm reading your questions. Okay, so that's from Joan. I've answered that. Victor said, for us who are working, what is the best strategy to frame the best entry with pending orders, and how many pairs can one trade to make it in a month? Well, it isn't about the number of pairs. It's about your win rate and also about your account balance. If you have a $200 account, I'm not one who believes you could turn it into $1 million in a month. You could turn it into $1 million if you have a good winning streak, but definitely not in a month. And if it happens in a month, well, I would really want to learn under such a person. But
prepare to meet me soon.
But if you're talking about, yes, I understand your worry. If you are working and you don't have the time to come back to your screen every 15 or 30 minutes, it could be tricky trying to trade the forex market, and you might want to trade off a higher time frame. Now, in that instance, this is what, now if you are trading off the higher time frame, also have at the back of your mind that your patients have to be matured, right? If you're trading off the higher time frame, there are times you get picked in a trade and you have to wait for 8 hours, 12 hours for price to actually start going in your direction. Price could just, let's go to GU. Let's see what happened in GU. So I'll explain this better. Let's go to GU. GBP USD. Now, this is GU. On Sunday, I met with one of my team and we analyzed the DXY. right? We analyzed the DXY, and I was of the opinion that the DXY will be bullish this week, right? Because it's giving us the footprints that it wants to be bullish. Check the PD array. The DXY had more reasons to go bullish than to be bearish. Let's wait for trading view. My network seems to be a bit slow to come up. Where are you? Right, so we predicted that price GBP USD was going to be a sell. Of course, if DXY is bullish, and we looked at the Great Britain GBP futures, and we also assumed that the GBP futures was going to be bearish. I don't know. My network seems to be slow. Trading view is not loading up as fast as I want it to. All right, so let's see. This was our markup on DXY, right? It took out liquidity on Friday. It took out this liquidity on Friday. This two. Let me use X. It took out these liquidities on Friday. DXY had no other place to go. Once liquidity is taken, price will rush away from that liquidity, right? So we marked up a previous order block here where price will most likely aggravate to, and we saw some, liquidity here, which also happened to align with this order block somewhere here. So I was anticipating that perhaps I was actually hoping that by now price would have made this move up here, then begin to race downwards to pick out the fresh liquidity here again. I was hoping that price would do that, but well, price is presently in this zone. NFP is on the way. I'm not too sure what price we want to do. I can't see any other thing, no fair value gap, nothing apart from the highs here. So that might be a good reason for price to go, or price to reject from this point down. But at least we're confident of this, and we're hoping to get to that point. That simply meant that, well, we also checked GBP. We checked Great British Pound futures, and we were anticipating that GBP was going to be bearish. Now, if GBP was going to be bearish and DXY was going to be bullish, it was only natural for GBP USD to be bearish, right? If you pair a strong currency against a weak currency, right? In this case, we had GBP USD, and for those of us who've been following Simply Peace for a while, we have a simple analogy we use for this. We say if you have a triangle like this, so let's say this is a seesaw, and you have a right pointed arrow upon your seesaw, right? And you have Great British Pound, and you have the USD here. Say this is GU. If this were a real life seesaw and USD, you are proposing that the DXY is going to be strong and the Great British Pound is going to be weak, then you should expect your seesaw to bend this way, right? And in Forex, when price is coming down, we're selling. So we were anticipating a sell in GU based off our analysis on Saturday, right? So let's go to GU. GU had this massive rally early parts, the later parts of last week, right? And so we had this as our order block, right? We had this as our order block as a den. Now, price traded back sluggishly and gave us a breaker. It basically gave us a breaker. We were anticipating GU to sell. Now we have a source, right? Notice how big that source candle is. Just notice how big that source candle will be. Right? And notice that it also met with a previous source right about here. Right? Previous source. So remember I said we trade from source to source, from source to source. If for any reason price breaks above this source, retest this source and begins to rally, when price comes back to this source again, I would be anticipating a rejection, especially if the source happens to be a proportion, a mitigation, or an order block on a higher time frame. I'll be expecting a rejection. Now, let's go back to this. So we had our break here, our breaker, right? And notice the clean intersect between the order block, the breaker, and the source, which is what we want. We want a clean intersect between the breaker and the source. We've said that here quite a number of times, right? So price traded back into the order block. And it was basically rigmaroling, dancing. But based on our analogy and this strategy, we should be looking for sell side opportunities alone. Just sell, right? Now, to answer the question that Victor asked, if you want to go bearish by setting your limits, you could do it blindly by simply setting a sell at the tip of your source and putting your stop loss at the end of the source. But in this case, that would be suicidal because your source is massive, right? If your source was a small candle, then you could attempt that. I wouldn't advise that here. So you just simply take a walk. You just simply leave this alone. If you're working and you have to trade, you want to look for another reason to go in, maybe at a later date, right? So we're anticipating a drop. It dropped today. It actually dropped today, but today is Wednesday. We did this analysis on Saturday, and notice how long it took for the drop to actually come to play. Now that was the sweet. How many pips move? Say you cut it halfway. That would have 100 pips. Not too bad. Not too bad. If you go down to your 15 minutes, let's go back to the 1 hour and frame up our entry here. Let's have period separators on. Okay, so this date here was price broke out on the 4th, which was on Monday, and the whole of yesterday it was actually doing a retest. The whole of yesterday was a retest, right? We had one entry, would have been stopped out or taken out at break even, and we had another entry for a sell. So let's go down to 5th and see how we would have taken our trade of this on the 5th. So now on the 5th, which happens to be yesterday into today, 15 minutes on the 5th. 15 minutes on the 5th. So 15 minutes on the 5th, this happens to be 5th, price traded. The blue line there is our source, and the golden line there is our order block. So price basically tested the source and the order block. Price gave us a peak here, right? Price gave us a peak. Price kept going up, never closed beneath. Gave us an entry here on the 15 minutes and would have hit our stop loss. That was a stop hunt, a clean stop hunt. Price gave us an entry here of the 15 minutes. If you know what I mean, maybe I'll take time to explain that again. Where are we? Right. So on the 15 minutes, we want to look for a breaker to the downside. So we had an order block here, responsible. Let me just mark that up. We have this order block. Let's use a different color here. We have, what should we use now? Black. We have this order block responsible for this high. We would have gotten in here. Price simply raided and dropped. We lost this trade, no problem. It gave us a new high and then gave us this order block responsible for this high, right? But this wouldn't have worked because we would have been holding on to this trade, and this would have been the stop hunt that gave us our loss. So we'll be looking out for a new high, which would have been this. Price gave us a new high and dropped lower. We would be selling upon a retest of that and would have caught the whole of this move. Now, I have a friend who doesn't like using the 15 minutes. He would rather use the 1 hour because fake outs are more prone on 15 minutes, even though 15 minutes will give you a higher win ratio. If we go down to the H1, so we had this order block responsible for this high. We had this order block here responsible for this high. Price broke beneath the order block responsible for this high initially. Price broke beneath it. We would be reselling at a retest. But take it from me, you still would have lost this trade because this move, if you were in the market when it happened, it was a whipsaw. It came down, went up. I'm not sure you would have been in this trade, but you would have lost this. But let's say you lost this trade. This was just 35 pips. No problem. This is GU, very pipful, right? Then we'll move to the next. This was the last bearish candle responsible for that high. When price broke beneath that bearish candle, we were sellers. Our stop loss was going to be from entry to that point, and we'll add 2 times our spread. So this is 32 or 33. GU spread usually 1 or 2 pips, so let's say 35 pips. And you would have held on to this trade. You reach 35 pips, and you are presently in for 110. So if you had reached 2% earlier on, you would have regained back your money now. Now, if you also use the concept of kill zone, if you also use the concept of kill zone, you would have had your entry for yourself, okay, during the New York kill zone. That's the green line there underneath. That delineates the New York kill zone. So you'd have had your entry at this point and pulled your trigger, right? So have at the back of your mind, yes, you would lose 1 or 2 trades, a couple of trades for that matter. But when it goes in your direction, when you catch the move, you'll be in that trade for a long time. We don't have the financial muscle and the discipline. In fact, it's not even discipline. It's not proper for us to have set our stop loss all the way here, which would have been the normal thing to have done. But that source was just too wide. Now, what brought us here? We're trying to look at framing out our entries and how we would have taken our trades. We framed out the entry for this trade on Saturday. We went to DXY to pair out what pairs would be the best to trade, right? Somebody was asking, okay, out of the 28 pairs, how do I know which to give my attention to during the week? You have to be able to understand each currency as it is. We had Australian dollar. This was my markup on Australian dollar. You can see it playing out cleanly, right? I marked this out. This was somehow somewhere around, price was here over the weekend. This week, let's see. This week actually started when? Sorry. This week actually started on the 4th, right? So On Saturday, 2nd, price was basically somewhere here, right? I anticipated that AUD was going to pull back into this mitigation block. And when it pulls back into the mitigation block, there's some liquidity here, right? It was going to sweep them off and after then drop. I'm anticipating weakness in AUD up to this point, somewhere around there. I'm anticipating weakness in AUD, and that's the arrow there, right? You see the arrow even before the candles printed, right? So these are ways you could frame up what pairs do you want to trade during the week, what pairs do you want to really give your attention to, right? Rather than just mark up other blocks round, what pairs do you really want to give your attention to? You want to look for strong pairs, you know, against weak pairs. If I have enough votes in Simply Pip's Telegram group, we might have 1 or 2 webinars trying to explain how to frame up what pairs to look at. But for those of us that will be joining the modified IOF, Prof has promised to give us a lowdown, and you don't. Do you use COT? I don't use COT for now. I don't use COT for now. So let's move on. If you have a market structure break, you can enter on. I didn't get the question, ICT Sniper. I didn't get your. If you have a market structure break, you can enter on 1, which will be a retest, e.g. resistance now becomes support. Yeah, you could do that. So at least for markup with 2 different brokers showing disparity, how do you correct one or choose the other? I presently use IC market the most, right? I presently like the way their candle, the data feed. I use IC market to balance it up, right? Then if you use trading view to mark up, then I will advise you use FXCM. No, sorry. Let's go to, let's say, GBP USD. I'll use FXCM. Oanda, grade A broker, but they don't show gaps. And I want to see what gaps are doing, right? They don't show the gaps, and I really want to see gaps. So I use the FXCM. If you use TradingView for your markups, right, they will most likely give you good reason, good candle printouts, right? So back to the questions. Back to the questions, sorry. All right. Can you explain how we use OTE? I will explain OTE, but maybe not today. Doji candles can be marked as breakers. Yes. Doji candles can be marked as breakers as it happened on is that euro? I didn't get that. Joanne, I didn't get. I got euro AUD, but it's like you mentioned 2 pairs. I guess you mean euro AUD. So let's see euro AUD. Let's see euro AUD on the H4. And what time frame were you referring to? H4 or 15 minutes?
H4.
H4, thanks. So let's go to H4. Very good. So here we have our source. This is the bearish candle responsible for the push-up. Now, please remember, don't expect this to work out 100% of the time. That strategy doesn't exist. Well, let me say it doesn't. Let me not say it doesn't exist. If it exists, I've not come across it. Right. So I'm waiting. Yes, this was our breaker. This was our breaker. This was the retest of the breaker. This was the drop. right? So unfortunately, on this trade, if you took this as your retest of the breaker, I don't know this week, I don't know, I'm not sure if this week, if any broker would have had this week touching the source, but it's just 7 pips up. So you could take this as a retest of the breaker and the source. Then this is your drop right about now. And let's go and see. So are you referring to this? Is this the doji you're referring to? Kindly let me know. So this is the last order block responsible for this drop. So basically, we are waiting for reasons to want to go short here based on this strategy. We would be looking for reasons to want to go short at this particular time on Euro AUD. Now, one good thing about this strategy is if you don't have your LSB, we also use TDIs. You may want to go watch our previous videos to see how we frame up our entries using TDIs. We want to see divergence, we want to see shark fin, right? But the modified IOF, you don't need any of those. You can even trade it on your phone at work. You can trade that strategy on your phone at work and move on, right? And you don't need excessive markups like we do here. But this markups helps you to understand the background of the strategy. So we'll be looking for reasons to want to go short on Euro AUD. And this candle can go all the way up through a week and come back down for a sell. We would be waiting. If price breaks above this, then we would be buyers and hoping that price will trade back into the previous source. It's as simple as that. So those of us in Simply Pips, you notice that there are times we wait from Monday all the way to Thursday to get our entry. But when we hit our entry on Thursday, we would have bagged our weekly PIP target. You just need to be willing to wait. That urge to trade every day. Yeah, Darren Flynn said, do you only trade currencies or anything that moves? Anything that moves. One of our instructors has tried this strategy on Ethereum, on Bitcoin. He's presently doing a back test on volatility and other synthetic derivatives. Right? He's doing back test on that, but it basically works on anything that moves. So I can imagine you going to do this on VIX. Right? So sometimes you get a threesome, source, order block, breaker block, all intersecting. Yes, you get those and it could be crazy. You know, when you get all of those things, it could model up, you know, your thinking, and you just simply leave the pair alone, right? Well, I try as much as possible not to trade the exotics like the MXN, the NOK and the likes, but this thing works also with them. If I have a mix up and everything is so jumbled, I just leave that. Remember, this strategy is born out of the fact that we don't want to catch price from the peak. We want price to give us a direction. Now, usually, I'm not about to teach open interest, right? But if you add open interest to it, you might just find a reason to pick a position in spite of all the movements. Maybe we'll have another session when we discuss open interest. But if price, look at what happened in Euro GBP. Price came into a daily order block. And Euro GBP has basically been stagnant since then, right? When price came back into this order block, Euro GBP has basically been, you know, stagnant for like, it made a massive impulsive move last week, Thursday, I think, either Thursday or Wednesday. It's been basically stagnant, you know, compared to previous weeks where it was, you know, moving up, moving down. It's been consolidating somehow. It's in an indecision phase, right? I would basically just leave Euro GBP And one day in the Telegram group, somebody say, hey, Euro GBP moved 500 pips. Then I'm now interested in Euro GBP because it simply has picked a direction. And once it picks a direction, I'm waiting for a pullback to trade the second leg or the third leg in that direction. Right? So there are some times when you're doing your markup, what you see, and I agree with Darren Flynn, you see something like this, order block, source, another source, another breaker, and an order block mixed in between. This is confusing. There are times you see that price broke out, moved up, came back down, break, and price, usually this happens in a consolidation. And when price is consolidating, you might want to look for other strategies to trade. If you are insisting you must trade that pair, then you should look for other strategies to trade, because this will just give you, if you are like one of our instructors that will be taking one of the sessions in the modified IOF, what he does is that he just hedges. He picks a buy and he picks a sell. So let's say he was actually in a sell ab initio and was in some, let's say 120 pips profit, and got into this point and price was dancing. He just picks a buy and a sell and safeguard his profits. Whenever price decides to make a break in whichever direction, he closes the losing trade and now takes position in favor of the new direction. That way you've safeguarded your profits for a while. Of course, your brokers will continue taking swap, but right, if you are still new and you don't understand all I just said, just leave the pair and simply take a walk. You'll find some other pairs like to trade, right? You find some other pairs to basically trade off. Question. I think we're coming to the end of this, so it doesn't get too long. Oh, I didn't know Prof was online. Yeah, so those of you that will be joining the modified IOF class, Prof has been trading profitably for himself and for investors for about 18 months or more now, right? And you just want to hear. And I tell you the truth, when somebody is profitable for 3 months back to back, you need to listen to them in this industry, right? We have a lot of instructors on Telegram, on YouTube. They are good at teaching, but they can't make money off the market. So if the doji was bullish, then it will no longer be an order block. Okay, you were JPYPS. Well, you might want to listen to Prof tell you about JPYPS. Prof, are you willing to come online?
I run I run I run away from JPY. Those guys, it's only GJ. GJ is a bit people, but the rest I run.
Thank you, Prof. So with time, if you are new to this, with time, you pick out your basic pairs. For those of us that will be joining the modified IOF, I think we narrowed down on, Prof, how many pairs? Was it 6 or 5? I think we narrowed down on about 6 pairs. Yeah, we narrowed down on 6 pairs, and we are going to monitor these 6 pairs for the number of time we'll be together. We'll pick all the entries, and if the pairs are dancing, we simply leave them and pick up some others. The fact is that some weeks you don't actually need more than 3 trades to hit your weekly target. There are some weeks you don't need more than 3 trades to hit your weekly target. All you need to do is catch them at the right time and you're up. This is USD MXN. Imagine you caught USD MXN here. You had an old source. This is an old source, ladies and gentlemen. And what do? We trade from source to source. Price came into an old source and gave you this clean rejection of the old source. You're a buyer. You're a buyer from this point. All you need is just this trade for this week and you are done. How do we count this now? These pips, the number of pips here is looking intimidating. This is about 68,000. Well, or what do I call it? 6,862. Well, it's an exotic pair, but this might just be what you need. And it gave us re-entries. Should you have missed this first? It gave a clean re-entry because you had this order block, a break above. Let's magnify this a little. A break above, a retest, and a bullish move. It gave us that, right? So you don't have to trade everything. I didn't take one single trade today, and I'm not feeling bad about it, right? So you just have to wait for your setup. And there are times it could be very painful. You wait for the setup and it just goes 1 pip or 2 pips away from you and price moves. What do? We don't control the market. We live to fight another day, and USDMXN is still pushing to the upside, right? So, Prof, what would we be offering during the modified IOF? Would you want to just analyze it? What would we be offering during the modified IOF?
All right. For those who will be joining, like I mentioned in the group, the first thing you're going to be getting is you're going to learn the strategy itself, the modified IOF. The good thing the funny thing was actually before I and the Bishop discussed it, we had been looking at ways of modifying this individually. And when we just discussed, we just discovered that we had virtually been doing the same thing. So it's just going to be off the daily. The intention is that you look at your charts and without doing any markup, in less than 120 seconds, you have your bias. So that's what the modified IOF is all about. Secondly, we are going to be focusing, just like Bishop mentioned, we want to focus on 6 pairs. We discovered that so many people, they monitor so many things. Eventually, a move happens on one of the pairs they previously analyzed or marked up, and somehow they are nowhere to be found. So we are going to be streamlining everything we are doing down to just 6 pairs. So we just discipline ourselves to just stick to those 6 pairs, mark up everything, know every single thing about those 6 pairs. And that's really the way you should trade, understand a few pairs, know everything about them, what time of the day they move, what particular news do you need to be wary about, different things about the pairs. So you understand those pairs in depth. So that's the second thing we're going to be doing. Third thing we're going to be doing is for those of us who want to be prop traders, because in this business, I don't know how many of us have a $50,000 account, $100,000 account here. If you don't, then sincerely speaking, the best way to make money of this market is to either be a fund manager or a prop trader. And for the two, I can definitely tell you that prop trading is far easier. As a fund manager, you can have people on your head sometimes, and if you're not careful, you can freeze. I can tell you from experience. I'm a fund manager. So we are training those who will be prop traders. So we recommend BlueFX, FTMO. So we'll be trying to raise people up to the standard we're able to trade. If you're trading those guys, your leverage, they don't use our leverage. We're using leverage of 1:3. So that's a whole different ball game altogether. So we'll try to help as many people as will be joining to become profitable as prop traders. Then we're going to be having a competition. So for everyone who will join, it's going to be a contest. So you'll be required to open an account that mimics the exact trading conditions as your prop trading account. So whether you open a prop trading account live or you open a demo that mimics it, either way, you're going to open one of such accounts. So the first 7 people, just 7, it's not going to be everybody. The first 7 people who would successfully grow the account by 5%, just 5%. The first 7 people who will successfully grow their accounts by 5%. If you mistakenly get your account drawn down by more than 10%, the system will automatically kick you out of the whole competition. So you are required to grow your account by just 5%. It looks simple enough, right? All right. So the first 7 people, the first 7 people to do that, and seriously, if you're able to do that every month, you are good as a trader. Take it from me. That means you are guaranteed at least $1,250 every month. That's as a prop trader. That is the minimum you're going to earn. So That is our target. So the first 7 people who are able to do that will have an extra session with me where we'll go over, for those of you who have been talking about open interests, volume analysis, and all those things. So we'll actually look at those things. We'll have a session or 2 where we look at open interests, we look at volume. We'll try to see. Some of us are usually bothered about counter trend trading and everything. So we'll see how to anticipate possible reversals in the markets, how to stay away from manipulations and some of those things. And so we'll be looking at open interests, a little bit on COT, just basically volume analysis, sentiment analysis to help us to recognize some of these things. Someone was asking, does this thing work on everything? Well, we already use it on Forex pairs. I've backtested it on gold. I've backtested it on crypto. I think I shared we have a group, some of us who joined the group, about 12 of us or 13 of us. I shared results from crypto trading today, or was it yesterday? I can't remember. So tested it on crypto. I'm currently, like Bishop mentioned, I'm currently doing a back test on synthetic indexes. That's volatility 100. That's what I'm starting with. So I plan to get into crash and boom by weekend. So far this works on it works on virtually everything. So and in fact, I was telling them so far it seems those synthetic volatilities will be the it's just that our fund, our prop companies.
Yeah, but Prof, I met another prop trading organization. Not that I
Okay.
met them, a friend introduced me to them, and funny enough, they have something similar to FTMO. You just pay once, you pass a test phase, and then you have well, their stop limits, the drawdown is slightly tighter, leverage is better, 1:10 as against 1:3, and you can trade exotics and some other things. So I think I'll go back and look at it. If it's better
Yeah.
off, brother,
I'm telling
switching.
you because because one thing you need, especially when you're trading this kind of see, we need to understand. This is also something I'll be sharing with the first 7 people who will do that. You need to understand strategies and understand where they work best. This strategy works best in a trending market. All right, it works best in a trending market, or even if it's going to be a ranging market, it should be a relatively large range. All
Range,
right,
yeah.
yeah, you don't want it to be like what we see in Euro GBP. I just since after this week, I've not even looked at Euro GBP again. I just saw that like it's not serious, it's not ready to do anything. So I'm just ignoring it till maybe the interest rate decision tomorrow. Maybe it will give some life to it. I don't know. So, but you don't want it. You don't want to be trapped in something like that on Euro GBP where you just moving. You just be getting so many fake outs and everything. So, the more volatility you have in the market, the better for you when it comes to IOF, whether the normal IOF or the modified IOF.
Yeah.
And one good thing about those volatility guys is that they move the volatility, well, their volatility, their volatility indexes. So they move a lot. They move a lot. So the more volatility you have in any pair, the better it is with IOF. I think I've just dropped another. Let me stop talking. All
Oh
right.
my. So thanks, Prof. It would be nice to see if we can bring some of our brothers and sisters up to speed. Um, and do this together. When are we starting? Hopefully.
We are looking at the 16th.
16, sir.
Yeah, we're looking at the
Yeah.
16th.
When you mentioned ranging market and it should be large enough, I just remembered what we did in Euro NZD some weeks back, and I quickly came here. So this was a ranging market, so to say, but it was large enough.
It was
Euro
large
NZD is
enough.
actually peepful.
Yeah.
It's a peepful pair. Just
Yeah.
this small move here is about 400 pips. So we're just buying, selling, buying, and selling. We were thinking this was going to go. Oh, I remember this loss. It was a painful one. It was a painful one. I thought we were going. I just woke up overnight and my SL had hit.
Well, we can't win everything.
Of course. They only took a little. They couldn't have taken off all these other ones that we got from the market, right? And just remember, we're trading from source to source into another source. And look at that clean drop. So sweet. Then look at this return leg. It was from an old source too, right? Isn't it sweet?
Yeah.
Ladies and gentlemen, we can't do everything on IOF today. I thought we'll be able to go down to the 1 hour, the 30 minutes and 15 minutes to discuss how we take our trades. There are two ways, three ways basically. It's either you're doing an LSB to take your trade, or you are actually taking it upon a breakout. Once you see a breakout, you pull your trigger. We had a guest instructor, Mr. Caleb, teach us that. Then those of you who love moving averages so much, you can't have it off your charts, then you use your shift, right? The Steve Moreau shift. That could be another entry for you. After taking out, the shift should not be used blindly. You should use the shift after liquidity has been taken out, right? That's the way I use it. So you had a shift here. You want to wait for liquidity to be taken out before you obey your shift. That will give you better entries into the market. We might have this again on Saturday, maybe during the day on Saturday, and you could frame up your questions, go do your markups. If you're interested in the 6 pairs we're talking about, I'll drop them in Simply Pips. Go work on them, get your questions ready, and we might be meeting again on Saturday. I want to appreciate everyone. Any question before we move on? So what about we, the newbies? How do we grow with you?
YouTube videos.
Just go watch the YouTube videos first. It's pretty difficult breaking down this. Sometimes it's like boring when I have to come and start teaching source all over again, right? So just go to the YouTube videos, drop your questions on Simply Pips. I'm very sure if I can't answer them, I'm sure Darren Flynn will answer you. I'm sure Prof will answer you. Victor is there to answer you. Jonah is there to answer you. There are several people. Mr. Pastor Stephen is there to answer you. Several people will give answers. And remember, we'll do all of these things for free. So you just put in the hard work, ladies and gentlemen. Just put in the work. You definitely reap the reward. Right? Thanks for coming online, Prof. Thanks for showing up. Let's see. Let's take a quick roll call. People who don't attend our Zooms and come asking us questions, and we could as well just tell them go watch the video. So I have somebody with A. I don't know A. I don't know is here. Afolabi, Ambrose, Chris, Darren Flynn, David, David, right? Onibody, Fidelis, Gloria, Chubo, Jonah, Joanne, Lawrence, Odiko, Rozok. Tosin, how are you doing? Nathan is always here. Nathan has to pay double, Prof. Nathan has to pay double.
Okay.
All right, guys, let's have a good night and God bless you.
Thank you, sir.
Bless you, sir.
Yeah.
Yes, sir.